Yeah, Steve, what's interesting is a lot of these analysts who followed the lead up to this IPO say they're not necessarily surprised that it performed this poorly, given those exact things you just pointed out, those negative headlines and the lead up to it. If you think about how this IPO is framed here, targeted towards retail investors, 90% of that uptake came from sort of the mom and pop investors, a lot of them first time buyers, and they were looking for what was considered a reliable name, a bit of a national champion in SoftBank. We saw commercials running on the back of that, but the negative headlines came just weeks before the actual listing. You pointed to one of the concerns, and that is, of course, Huawei. SoftBank, among all three telco carriers here in Japan, has the heaviest exposure to the Chinese equipment maker. And on that front, the Japanese government came out earlier this month and said that they would no longer be using any of the Chinese telco equipment suppliers and encourage private companies to do the same. So the concern is just what exactly this means for costs that are likely to add up to SoftBank at a time when they are facing a lot of competition in the market. We had a chance to speak with Mark Einstein, who is with ITR Corp. He gave us a lowdown in terms of what he thinks could be the big concern as it relates to Huawei.
NVIDIA has had quite a price slide. There's a huge kind of collapse in the crypto mining market, and the market for GPUs is going to get very soft, if not dead. I think that one is on the list. You could also look at ARM. There's been a lot of M&A in the chip sector. Recently, people like Qualcomm and NXP are out there looking for deals. So I would probably put those companies at the top of that list.
That was Mark Einstein. They're actually addressing the concern about the SoftBank Vision Fund. We'll get to that in just a second, but let me get back to the point about questions over Huawei, because if in fact SoftBank does have to switch out some of the equipment with Huawei for 4G, Mark Einstein says that's going to add costs for SoftBank because the European carriers or European equipment suppliers are likely to be more expensive, and also they're not going to be able to offer competitive prices to consumers as a result. On that front, we have been tracking this press conference underway after the close here in Tokyo, and we did hear SoftBank executives talk about the core equipment, saying they may need to switch to European suppliers, but they will need to take a cautious approach. The other concern here in the market is just how saturated it is. Japan is the third largest mobile market, right behind the US and China. There are already 3 carriers. SoftBank is the third one behind NTT Docomo and KDDI, but there's another player next year, Rakuten, that is coming online. This is a market, of course, we've talked about this a lot, that sees a population declining, so investors don't necessarily see an upside in terms of growth. There's also the issue of government pressure on these carriers to slash costs. We've heard the Chief Cabinet Secretary say something as much as 40% needs to be slashed from these prices, so consumers essentially have more purchasing power. So there's a lot of headwinds, and that all added up to that 14.5% drop we saw in the debut today.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.